Welcome back. My next guest has been on with me several times. I have with me David Rada. And David, I want you to tell everybody a little bit about yourself, being that you're an independent general agent and the owner of Senior Citizens Insurance Agency. Tell us a little bit about yourself and what we're going to talk about today.
Thank you, Carol. Nice to be with you today, too. But before I say anything, I just want to say there's one thing Democrats and Republicans and independents can agree on.
What's that? I need to know, David.
It's over.
Yeah. It's over.
It's over. All right. Anyway, sorry for yelling, but I'm glad it's over. I got tired of the rhetoric that we're hearing from both sides. But anyway, nonetheless, no, I've been in the business of helping people with their retirement issues since 1976. I grew up in the business. My folks were in it. My brother John, my sister Nikki, and we all own our own businesses. And the purpose of what I do is to try to provide educational information, products, and services to help people in their retirement. And also before they retire, so they get prepared properly and get the most bang for their buck. And so I consider myself a safe money manager. And oddly enough, with this election taking place finally, the financials are kind of uncertain right now. A lot of people don't know what's going to happen, but there is one big looming threat. And before I talk about that, I might add that gold has already taken a hit since Trump was elected, believe it or not. And so they've been talking about that today on the TV and radio. But the biggest threat, in my opinion, is the Fed rate hike, which they've been threatening to do for several months. And apparently, December is probably going to be the month that they do it. And that will make markets royal. And it'll be very tough on people who have all their money in the market. I would suggest, and I mean this, you need to consider taking a portion of your money and setting it on the sidelines before that happens, because it'd be a shame if you lost half of your money. And if you lose half your money, it takes 100% to get back to even. Mm-hmm. You know? If you have 4 quarters in your pocket and you take 2 out, now you've got 50 cents. It takes 100% to get that 50 cents back in your pocket. So a lot of people who lost money in 2007, 2008 are aware of how long it took to get back to where they are now. So I hate to see that happen all over again to a lot of people, and it does, then they're going to be sorry. So there is alternatives, but I want to read something to back up what I'm saying about what may happen. And I got it out of the USA Today, Arizona Republic, and it was written Thursday, November 17th, which was yesterday, by a gentleman named Adam Shell from USA Today. So I'm going to read it verbatim. Not only are long-term interest rates rising since Donald Trump's surprise election win, so are odds of a Federal Reserve hike of short-term rates at the central bank's final meeting of the year. So-called, and here's a new word, I'm taking that out of Trumponomics. That's a new one.
Like it.
But it says so-called Trumponomics is a big reason why borrowing costs are on the rise. Trump's plans for jump-starting economic growth by boosting fiscal stimulus, including tax cuts for individuals and businesses, as well as increasing spending on infrastructure to repair the nation's roads and bridges, is seen as causing a rise in inflation and resulting in even higher budget deficits for the U.S. As a result, this government stimulus coming down the pike makes bonds a less attractive investment, as do assets that benefit from a faster-growing economy. Future markets are pricing in more than a 9 in 10 chance of the Fed hiking its key short-term rate at its last meeting of 2016 in mid-December, which would mark its first hike since December 2015. I'm going to interject here and say many people who are in the market will remember last January, the market dropped about 10% overall because of that. But it says here, the Fed rate hike odds are nearing 100% for December, notes Paul Hickey, co-founder of Bespoke Investment Group. Investors have also sold off long-term U.S. government bonds since Election Day, with the yield on the 10-year Treasury rising to its highest level of the year from 1.857% to as high as 2.313%. The sell-off in bonds has cooled a bit. The 10-year is now yielding 2.22%, With a Fed hike all but assured for December, Wall Street's focus now shifts to what the Fed will do next year if the hoped-for growth recovery due to Trumponomics comes to fruition. End of article. So if you have money in the stock market, I would suggest you park maybe half of it, protect it, and wait till things do take that tumble, and then get back in then if that's what you really want to do. But I like to ask the people that I see, and I do personal interviews, and I don't think anybody's the same, so I like to ask one question, and it is the same question. What's most important to you out of three things that we think about with our money? Safety, earnings potential, or liquidity? Which one is number one on your list? Which one is number two? And which one is number three? Now, the younger you are, most of the folks say earnings potential. Okay? The older you are, most people say safety. And then earnings potential, and liquidity usually lands last. Interestingly enough, if you're in the stock market and you're 55, 60, 65, 70, maybe you better think about safety and really take care of your money before this change in the short-term rates takes place.
Well, you do consultations, free consultations by appointment only, correct?
Correct.
Your phone number that you want them to call is 623-500-6143, and you have an automated CD alternative, and I want to talk a little bit about that.
Okay, well, really what that is, it's an automated phone system to learn about how to find out about CD alternatives.
Let's talk about it, because
Okay.
I have no idea how to say it.
Okay.
Go ahead.
All right. That's okay. No, basically speaking, what I'm doing is I'm giving people an opportunity, because there are a lot of people that like liquidity and safety, but they're not getting anything out of the banks. The banks are paying them maybe 1% on a 5-year jumbo CD, locking up their money for 5 years and only paying 1%. That's terrible. I mean, oh my gosh, you can do so much better than that by using insurance products. Insurance companies pay a much higher rate of return. You can get a 5-year, multi-year guaranteed annuity, and over the period of 5 years, get a much better rate of return, as high as 3.5% in some cases. If you want a longer-term product, you can actually get even a higher rate of return. The fact of the matter is, you also have 10% penalty for withdrawals, too, which you don't have with CDs. That's an alternative that's available to folks, and at the same time, a nice place to put their money until things turn around. I hate to see people try to retire on a lot less than what they could possibly retire on.
So the phone number to call is 623-500-6143, and he does free consultations by appointment only. He's been doing this since 1976, and it's in the blood.
Yeah, it is. But I still bleed red, not green.
You could check him out on his website. It is David Rada, RADA.com, or call him again, 623-500-6143. We've got a couple of minutes, so what do you want to talk about now before you go?
Okay, well, first of all, one of the most important things about annuities that you don't have with CDs, you have something called tax deferral. Einstein said the most powerful force in the universe is compound interest. That means putting your principal in a position to earn interest, then the principal earns interest, then the interest earns interest. That's compounding. But when you don't have to pay the tax on the interest because you don't have to report it on a 1099 each year, then at that point in time, you're actually getting the full value of that interest. So in my opinion, that's one of the unique things about annuities that you don't have with CDs or other investments. You have something called tax deferral. You don't get taxed on the money as you earn it, and while it's accumulating, you only pay tax on the gains when you take it out.
Well, he does free consultations by appointment only. You can check him out at David Rada, RADA.com. He's been doing this since 1976. He says he's a safe money manager. The phone number to call, again, is 623-500-6143. Final words real quickly.
Just call the number and leave your name, and we'll get back to you and provide the information that you need.
Give him a call. The number is 623-500-6143. The website is davidrada.com.
Thank you, Carol.